Welcome back to the channel, Crypto Trend Trader, with a quick update on Bitcoin. Before we get started, I'd like to remind you it's not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. I'm looking at the Bitcoin 4-hour chart. As you know, we were down in here, and everybody was getting very bearish. And I specifically said that I think everybody's wrong to get bearish at the bottom of the range, when we've been essentially just oscillating inside this triangle this entire time. So what I expected to happen was us to continue oscillating inside the triangle, which we did. We came down that other time to the heart line. Exactly like I said, that was in confluence with this bottom green ascending support line. And then when we came back down for the retest double bottom, it was very obvious that all we were doing was just forming another one of these triangles, and that we were going to break through the range. Once again, everybody was getting very bearish, and I expected a short squeeze to come in. So as soon as I saw, basically, I was thinking right here that it was possible this was the end of it, but we were starting to form like this uptrending little support line right here. So I was paying attention to that, and then when we came in and put in another higher low right here, I knew we were going to break out to the upside. I knew we'd come at least to the top of the range, which is what we were talking about, that I think it was like 92.60 range or whatever, but I didn't necessarily expect us to get above this 94.40. So I went ahead and sold into 9400, took profit on my positions, and actually pretty much out of the markets at this point in time. Earnings coming in on traditional markets. Crypto is in a strange place right now, as far as like fundamentals and technicals. And at this point in time, I don't see good risk reward ratio in traditional markets to the upside on almost anything, and I don't see good risk reward ratio in crypto to the upside on basically anything. At this point in time, the way I am looking at this chart is to the absolute most basic breakdown. I'm looking at this as the top right here, that 10.4 when we came in. That was our top, okay? That was our highest close on substantial time frame. When we came down from that, we put in a low right here. Then we came in and we put in a lower high. I mean, you can count each one of these as putting in lower highs, but the point is that was our top, so then that was our bottom. That's the lowest low we've put in so far. So before this is validated as an actual breakout, we could break out above this and continue up to the next one. And we could break out above this and continue up to the next one. And we could break out above that right there and continue up to the next one. And we could come all the way back up to like 10.2. And we could close at 10.2 and then sell off. And if we come, that's a high, then that's our low right there. Then that would literally just be a lower high. That would be a high, a low, a lower high, and then we come back down, put in another low. But the way it's going to look on the chart when it's happening, when it's developing, it looks like that was our low, and then it's going to look like when we take out this right here that we're putting in a higher high. So then we put in a low, then we put in a high, then we put in a higher low, because it's higher than that low, and then we come and we put in a higher high. So it looks like we're starting an uptrend. But all it is an uptrend of the retracement of the final move, because I really do think that we've topped out, at least for now. We've consolidated at the top of the range for a long period of time after, you know, a violent move up. It just, at this point in time, whether you're biased to the upside or to the downside, I don't see a functional risk reward ratio that at this point in time is useful. Because the way I look at it is you're potentially looking at, to the upside, you're looking at, what is it? It's not even 10%. A potential 9% move you would miss out on from here to the top. So there's 9% of indecision, like where I won't know. If we come up here and we close higher, I'll know. So I'll miss out on this 9% in the meantime. But the amount of downside potential that there is right now is ridiculous. There's just no, I mean, because we literally at any point in time could just sell off and potentially come all the way down here, and it's a 52% downside, and we wouldn't even take out our low. That wouldn't even take out our low. So the relationship between these two things, we have potentially an 8% risk reward to the upside before we know, but we have a 52% risk reward to the downside before we know, or 52% move to the downside before we know. So when it's all said and done, the risk reward on 52% compared to 8%, there's no possible way that any trade to the upside is worth it at this time. So I would rather miss out on this little zone here to the upside, and then if we're able to close, if we move back up here and we take out this high, then I will say, okay, we took out this high and we took out this high, and now I can legitimately expect continuation to the upside. And again, we can move all the way back up to like 14,000. So then it starts looking tempting again, because 14,000 was our previous high back here. Okay, so that all of a sudden that starts looking tempting again. So now the move from here to here, 8%, that doesn't look very tempting at all. But now if we take out this is a no trade zone for me right here. I'm not really interested in this. That's why I just closed. I take profits. I'm done. I'm good. I'm not greedy. There's no reason for me to be involved in this zone right here. Once we take out this right here, we take out this high, this high, this high, that whole just hard area we were unable to break above, then I will get back into a long trade and continue, because then you can take that trade all the way from like, 10.4, 10.5, 10.6, whatever, all the way up to 14,000. It's like almost a 40% trade. So 40% to the upside is comparable to 50% to the downside. But that 8% to the upside right now, that little meat left on the bone right there, I have no interest in that. I have no interest in that anymore. I'm completely good on that situation. So at this point in time, we could continue up to the upside right here. That's fine. I'm not even interested in any of that. And I feel the same way about traditional markets as well. There's been far too much movement to the upside and it's based on only a few things and complete speculation, which that's fine in speculative markets. But the stock market is not supposed to be as speculative as it is right now. These companies are completely overvalued. We're going to see massive amounts of bankruptcies coming in as markets shift. Even if everything went back to normal, spending went back to normal, and the virus like went away tomorrow and everything was just normal again, certain markets will shift. Certain things will change forever. Psychology has changed, therefore like spending will change, and like people will travel different, people will spend different, and these types of things last for like 30 years, even if like financially everything just went back to normal tomorrow. So my point is that this is a pivot point in like reality and in like actual traditional markets and like commerce, e-commerce, technology, spending, fossil fuel markets. Like all these things are at a massive pivot point right now. So everything is about to change. So all of a sudden the risk reward ratio goes through the roof on all these things. They become extremely, extremely, extremely risky based on traditional metrics of evaluating like price to value, price to earnings, anything like that. So, and then couple that on top of the fact that we're essentially looking at a generational shift where you have a massive amount of people like basically like leaving the workforce, going into retirement, pulling money out of the stock market or pulling money out of, valuable resources to now live off of, or, people passing away and that money getting passed down, generational wealth. All these different things are just massive factors right now. And then the final catalyst, the final thing that's just setting all this off, not getting political at all, but obviously the American election is this year, and it's obviously bullish to the stock market and to America if Donald Trump gets reelected, because he, bases himself and his success on the stock market. He's made that very clear, and, so has the stock market. And then on top of that, Joe Biden has talked about, re-increasing the taxes and everything like that. So, that just, it looks bad to them and it scares people out of the stock market and everything. But now take all that stuff and put it aside and don't take into account those politics, and don't think I'm biased towards one president or the other. None of that. Take all that out of the equation. But the most important thing, the final catalyst, I think, to all this will be, is I think what's going to happen is they keep talking about this payroll tax holiday, and now they're talking about like wealth tax holidays. They're essentially talking about like capital gains tax, like exemption or holiday. So think about this real quick before I let you go on this video. Think about this very quickly. I want you to just really mull this over and leave me a comment about what you think and your opinion on this in the comments. I'm very curious. But think about this right now. If you were looking to leave the stock market with a mass amount of money, a ton of money, and you're trying to sell something, an investment, you have to pay between, let's just say roughly 20 and 50% taxes in the United States on that, capital gains tax, 20 to 50% roughly, okay, depending on how much money it is, etc. So in order for it to be worth it for you to leave a stock, leave a company, leave a trade, like leave a position, sell something, you have to be expecting at least a 20 to 50% pullback, or it's not worth it. So that's why when the stock market crashed before, it gets picked back up and we're right back where we started now, because the taxes stop people from selling. Okay, if there's an exemption on taxes, if there's a holiday on capital gains tax, and you don't have to pay taxes on that, there's no, all of a sudden that 20 to 50% goes away, all of a sudden you literally will have millions, hundreds of millions, billions, even trillions of dollars pulled out, because the problem initially was liquidity. We all know that. And then the problem was going to be solvency. So first the problem is there's not enough money and there's not enough trust, so things can't move. And then that's liquidity. And then solvency is buyers. Okay, the price is moving down, you want to sell, but there's nobody to sell it to. That's that old joke, that who you want me to sell it to who. There's no buyers. There's nothing in the books. Okay, and that's when, like, you know, the measures come in and everything stops, and, you know, they're able to halt trading, and the Fed comes in, they start making all this, you know, changing monetary policy, etc., and they slowly are able to pick it back up. So that's your liquidity, that's your solvency, okay? But now the problem the whole time that never went away was the taxes. Why would you sell a position if you have to give half of it away? It's too risky, because it could move up. You know, it has to move down 50%, but it could potentially move up, you know, indefinitely. So why would you sell that position? Especially if it's a long-term investment, especially if it's already in profit. But now you take away that negative incentive, you take away that 20 to 50% handicap, and all of a sudden the risk to reward on leaving that money in the market is exponentially greater. Taking that money out, or at least a large portion of it out, so if all of a sudden you get a payroll tax holiday, or not even, that's irrelevant. Take the payroll tax holiday out of the equation. Don't even pay attention to that. Let's just take capital gains out of the equation for a minute. If all of a sudden you're able to just take out as much money as you want without paying taxes on it out of your investment portfolio, and you're an aging American, it just makes sense to remove a quarter or 50% or 75% or 90%. It just makes sense. As someone that works their whole life for something and invests in something, and there's this much indecision and this much craziness going on in the world, and this much stuff is changing, and you've lived, you know, a lot of these people are 50, 60, 70, 80, 90 years old, and they're watching what's happening right now, and statues being torn down, and, you know, slavery and organ harvesting around the world, and all this just absolute craziness. And again, this is no bias politically or socially or economically or anything like that. Okay, I'm literally just saying right now there's so much indecision in the world and in the markets that on a risk to reward ratio it makes sense to de-risk. So with that being said, the final catalyst to a massive crash in the stock market and global markets would be a tax holiday. So if all of a sudden capital gains tax goes away, which I think is most likely going to happen towards the election, because Trump will, one of two things, he'll try to do it to help out all of his friends, constituents, buddies, all the rich people if he's not going to get reelected, or he'll do it if he thinks it will help him to get reelected. But either way, it makes sense for him to do it. And again, no bias here. I don't care if you like him or not. But I'm saying for wealthy people and power, and that many people that you've been surrounded with your whole life that have influence on you, and all of a sudden you're given the ability to basically help out all your buddies and help out this ruling class, you know, and essentially save trillions of dollars, like legally through, you know, tax exemption. I don't know, man. I think that's going to be the final catalyst. So, and again, I didn't mean to get all political on this. I want to keep it technical analysis and everything, but I'm just being honest with you guys. I didn't liquidate any of my metals positions. I think precious metals are where it's at. Obviously, you can see it on the charts. I hold quite a bit of physical, and I think everybody should, regardless of what you think. And then obviously, I'm diversified through like property, and I do have like long-term hold accounts in crypto and everything. But as far as trading accounts, traditional markets and crypto and everything, I'm stepping back temporarily right now, and waiting to see how earnings and resolution and everything starts to play out, and how I want to see at least how this quarter starts looking, and how things start looking. I'm not saying I'm not going to take momentum plays when they happen, and I'm not saying I'm going to disappear and not be making videos every day or every other day or whatever, but I'm just saying right now, I want to be perfectly honest with you guys. The risk reward is just not there for me on any of these markets, generalized. So that's it for today. Crypto trend trader. We could get more continuation to the upside, but unless we get out of that range that I talked about, unless we take out essentially, that this area, until we're able to get up here and take out that triple top, basically, I have no interest in participating in these markets. And it looks like, the potential to the downside is just exponential. And then when you look at Bitcoin dominance, it looks like Bitcoin dominance is about to start ticking back to the upside. On like a long-term trend. It looks like it's going to start going back to the upside. So what that means is one of two things. It means that Bitcoin is going down slower than the altcoins. So the Bitcoin is selling off, but the altcoins are selling off faster, or Bitcoin is going up faster than the altcoins. That's how Bitcoin gains market dominance. Obviously, most people already know that. But my point being, this massive wick right here of Bitcoin dominance sell-off, that's a bottom. That's what that is. That's a bottom on a daily. All right, so now we're looking to shoot back up to the upside and at least retest these breakdown points here. So what that's going to mean is it's going to mean a bunch of money is going to be coming from altcoins into Bitcoin, or leaving altcoins while it stays in Bitcoin. But regardless, either one of those two scenarios is happening. Bitcoin is going up faster, or it's going down slower. But it means altcoins are going to get wrecked proportionately to Bitcoin. Or not wrecked, but, take a hit. So that's what I'm paying attention to right now. I just wanted to bring that to everyone's attention. I try to look out for you guys as best I can. And, I do this for you guys, as much as I do it for myself, and accountability and everything. So appreciate all the support from the community. Let me know what you guys thought of that other video I put in. I know it was like a little something different, but I do often go on like these like talk rants or whatever, and I know a lot of people like that, and a lot of people just like the TA, so I kind of separated it and threw it with those animations, just to kind of do something a little different. Do you guys prefer if I break it up like that, or do you like when it's all kind of like blended together into one? So well, there you have it, guys. Appreciate everybody, appreciate the community. Show me some love in the comments, guys. Crypto Trend Trader, and I'm out of here.